This is More Than Money with Mapalo Maku, brought to you by Sasfin Wealth.
Welcome to More Than Money. I'm Mapalo Maku, a personal finance columnist, and I love having money conversations that change people's perspective about finances. Why am I doing this podcast, you might ask? To talk about money. Not the paper stuff. I mean the baggage, the feeling, the emotional, heart-wrenching stuff. We find this conversation so uncomfortable to have, which is why on this podcast, I have decided to have this very difficult conversations. We are going to have some difficult discussions because better money conversations lead to better money confidence, and healthy money dialogue leads to healthy money decisions. Today, I must say, I am extremely excited. I have Maya Fisher-French joining me this morning. Maya is a money maven, writer, presenter, speaker, author, and dare I say, my colleague and friend. Maya, welcome to More Than Money.
Oh, welcome. And it is wonderful because I think you and I have been friends for a long time, and we've shared a lot of our personal stories with each other. So this is quite interesting.
You know, when I think about you, Maya, and I know the way a lot of people think about you is that, goodness, Maya has always had this money thing on lockdown. I mean, when people want to know what's happening with any legislation, with anything when it comes to personal finance, they know that they can go on Maya on Money and find factual information. And you truly love the consumer, and you've been educating consumers for many, many years. But when people think about you, they think, Maya has always had it right. Is that true, Maya?
Well, no. I think it's a mixture of it. I think there's some things that I've always kind of done, I've always been really interested in investing. My career started out in that. I joined an investing private bank, and I got into investing at quite a young age. But Mapelo, the budgeting side and the debt side, that came a few years later when I had, I had a financial knock, and I had to actually, pull myself towards myself and start getting a grip on my day-to-day money.
Yes. Before we get to the nitty-gritties of, getting into a financial mess and having to pull yourself out, can you give us a little bit of background? What were the money conversations at home with your parents? Were there money conversations, and what impact did those have on you and how you view money?
No, the money conversations in our family were very unhealthy. I think that's probably the sum of it. So I had that really typical family that I see, so often, where the husband earns the money but never discusses it at all with the rest of the family. So we always just were told there was no money, and I just remember my mom and dad fighting a lot about money. I remember he gave her an allowance that she had to do all this grocery shopping for 4 kids on. It was never enough. Those are my memories of just there never being enough. And there was always this tension in the house. So I have a lot of money memories of that. And I think that Mapelo really made me very financially independent as a woman in my own marriage. I never wanted to be like my mom and have to ask for money for anything. Also, I had a big financial blow. My dad died, and this comes to the big, the family conversations that weren't happening. He died, I was 16, and we discovered we were sitting in huge amounts of debt. So when my dad said there wasn't money, he wasn't kidding. He never admitted it. He never discussed it. And I know my mom, and I know how she's pulled herself out of this, and she's incredible how she turned her life around. But if he had sat with her and said, this is the situation, my mom would have been right by his side, and she would have supported him in all of this. But he wanted to pretend that we were able to afford the lifestyle that we had, and we couldn't. And I think that shame, that, we're not wanting to tell the truth, the hiding of true information, I think that happens in households all the time.
Often what I hear when you talk to couples, the man will say, no, but I cover what I need to cover, so I don't need to tell her how much I make. I don't need to involve ourselves in the conversation around money. What do you say to individuals or couples who say that?
That is not marriage. When you get married, if you don't want to get married, don't get married. But if you want to get married, then you need to start, understanding that marriage is about money. It's about bringing, in fact, think about it. There's a marriage contract. There are literally laws about what happens when you get divorced that are all about money. So it is all about money. And if you cannot come together as a household and say, we're going to put our money together, we're going to both understand what our financial situations are, we're going to understand our bills, we're going to understand all of these things, then what is your marriage actually? What is it based on? And I think that's a very important question, to sit there and think, well, you're coming together emotionally maybe, or physically, but you're not financially. I think you just got to start rethinking your relationship very clearly. And I was speaking to a psychologist once, and she spoke about, she said you have an emotional marriage, a physical marriage, but you have a financial marriage. And that's one that people often come to very, very late. And sometimes that's when the divorce happens, actually. So I think that's my comment would be, sorry, but money's part of the marriage.
So now, obviously, having observed this lack of conversations and conflict around money at home, you say that it made you become a very independent person. Do you think also that there is some sort of negative side to, that hyper independence as a woman that you've seen, maybe even with yourself, when it comes to managing money, asking for help from your partner, and how has it impacted your relationship with your husband?
It's a very good question. I think there is, look, first of all, I carry money fear. So I'm always worried that what if I don't have money, so there's a fear that comes with it. That's not always healthy as well. One should embrace abundance more and positivity. But, I still remember an argument my husband and I had, and we actually are able to talk about money. It's not a big problem, but it had to do, I think we were buying our house, and he wanted me to take on the credit facility, or there was something around that. And it would have maxed me out. It would have maxed out my credit, facilities in terms of if I suddenly needed to urgently access money. And I said to him, I don't want to do that. And he said, but I'm here. I mean, you don't need to worry about this. And I said to him, but what if you leave me? you divorce me and I'm stuck with all of this, And he looked at me and says, don't you trust me? So we had a big trust conversation around this. And he did also say, why is it always me leaving you and you not leaving me? So we did have that. But I remember really, feeling, and I will always make sure that I am financially secure. And he can sometimes interpret that as a lack of trust. And Mapelo, this is why it's so important to talk about your upbringing with your partner. Because when I was able to articulate to him why I feel like this, and that it makes me feel safe given my upbringing, and then he articulates how his parents worked, and they were very together, and there was never a money issue, and the dad was always generous to the mom, and so he came from a very different upbringing. And I think when you can both talk about your upbringings, then you understand why you are having the conversations you're having today, and have sympathy and understanding around that. And I think when he understood that mine came from fear of what happened to me, and it was not about him, that I think that helped a lot.
When did you start talking about money with your husband? Was it from early on in the relationship, or was it now when you start having kids? What was that like?
It's a good question, actually. I don't remember actively talking about money and budgets and that until we hit our financial crisis. I always had investments, and, we would talk, my husband was in the finance world as well. So we always talked about general things like the markets and investing and things like that. But I think the only time it really came to a crunch time and we had to sit down and have a very real conversation was when we had a financial problem, which was in briefly, we'd bought a new house, a big fixer-upper, for some unknown reason that we still don't know today why we did it. We just had my second son was born, we had medical bills, and then both of us, within 12 months, both of us lost our jobs. And I was very quick to contact all the credit providers, the hospitals and the doctor bills, and tell them the situation. And they were all incredibly helpful. I mean, all of them gave us a payment plan, and I thought we were so on top of our money. And I had to go freelance. That's when I went into freelance journalism. And my husband took a couple of months, but he found a job. But the job wasn't at the same income that he had earned, but it had bonus potential. And Mapelo, at no point did we discuss what is our budget, how much do we need to live. We never had that discussion. I mean, this is actually shocking considering what I do today and what I advocate today. This had been going on merrily. And remember, freelance, it takes you a long time before you're earning the salary that you were before. And, I would go to the shops and I'd swipe the card and the card would go through. I never thought about any of it. And then he got his first bonus. And I was so excited because, we hadn't bought any curtains for the house and we hadn't bought this. And so I had his entire bonus spent. I was going to have a great time, the bonus. And he said to me, no, it has to cover the overdraft. Mapelo, I didn't know we had an overdraft. I did not know.
Then after that, is that when you realize that we actually have to sit down to the nitty-gritties and start having real money conversations?
Absolutely. And I was so appalled that I, who had been raised the way I had, and the fears and anxieties and all of this, had actually just gone and done that. I was so ashamed with myself, to be honest, for not having those conversations earlier. I thought, I'm basically my mom. Remember, I was saying my dad didn't talk to my mom about the debt. Here my husband was carrying the debt to keep our lives going. I mean, obviously in his head, he thought, I'll get a bonus, I'll settle it, whatever. I didn't know about this. He never had that conversation with me. And I thought, oh my word, history is repeating itself. And that was a decision I made that day. I thought, no, this is not happening. And I wrote our first budget, Mapelo. I wrote our first budget and I burst into tears. It was horrible because the money going out was much more than the money coming in. And I was just in tears about it. So that was our first money conversation, real money conversation.
But you said something interesting, and I see that quite a lot, not just amongst couples, but friends and family, that it's much easier to talk about what is seemingly sexy. The stock market, which shares or investments are doing well, but people hardly get down to what are my fixed expenses? What are my variable expenses? How much actually am I spending on different categories, and which area can I cut back on? People actually don't have those nitty-gritty, detailed conversations around money. And that's why in your case, your perception was, or your expectation was, we're going to use the bonus to furnish the house. And in his mind was, no, we're using the overdraft for everyday life, and my expectation is that the bonus is going to cover it. Why is it difficult, Maya? And I mean, you've seen this over and over and over again, even in the work that we're doing together right now, that couples still find it hard to have conversations about money, friends, families.
I think there's just so many layers to it. I think there's practical layers, there's emotional layers, there's a whole lot of stuff going in there. And I mean, I just think now my husband and I needed to do, you'll know all about the survival budget. So we're going through one of our ups. We have ups and downs in the household with income, and we need to tighten our belt. And so we needed to go. And we've been quite good, but I need to touch base with my husband on the budget again, have another look at it. Well, the whole weekend went. We were just like, do we really feel like it? There's so many other nice things to do this weekend and sit down and do this. So I think first of all, it's hard to just, it's boring. It's hard to pull up the numbers. It's uncomfortable because you're looking at something that's going to, that's not nice to look and say, you've spent too much on groceries. I mean, it's much more fun to look at our investments and how they're doing than looking at our budgets. So I think that's part of it. And then I think there is this emotional component. And I see it a lot, Mapelo, with men, where we could be sitting in 2024, but there's still this perception of a man being the main breadwinner. So for many of them, they don't want to be sitting with their wives or spouses and saying, listen, we're tight. We need to start looking at finances, because they're going to feel like they're depriving them. And unfortunately, women are quite equally as bad at sort of saying, well, your job is to provide. And if you walk into a relationship with that attitude, you're not allowing your husband to open up and have these conversations if you have this belief that he should provide and that, that he's a failure if he doesn't. So I think that those sort of emotions come into it as well. And also, Mapelo, the other reason we stick our head in the sand is that when we see the truth, we have to change, and we don't want to change. It's very hard to say, we have to cut back on eating out, or we can't buy the kids those things this month. Those are not nice things.
Or maybe we even have to downgrade our cars, our home, the kids, the schools that they go to. Those are really hard conversations and very difficult decisions to make.
Exactly. So we avoid them.
You are listening to More Than Money, a podcast collaboration brought to you by Sasfin Wealth. At Sasfin Wealth, we empower our clients to reach their global investment goals, to retire with dignity, and to leave a lasting legacy. If you would like to have real money conversations, visit sasfin.com/wealth and talk to us. Enjoy the rest of the podcast.
So now you find yourself in this situation and you finally decide to do a budget. So I want you to tell me how you got out of debt, started building back your life to when it comes to your finances, because oftentimes people say it's just so overwhelming. Where do I start? I don't nearly earn enough to cover all of these debts. And I'm sure you've seen this over the many years. Some people just even say, you know what? I just can't. I don't know what I'm going to do. Then they don't really get into the process of paying off debt, living within their means. How do you actually do it, Maya? And how did you, as Maya Fisher-French, do it?
So it takes a huge amount of discipline. And I think that's the bottom line. You achieve nothing in life without discipline. If you're trying to lose weight, if you're trying to exercise, it takes discipline. So sorry, there's no silver bullet, there's no magic tablet. It takes discipline. And the first thing we did was the budget. And that is why Mapelo for me is like, you can go nowhere until you've done the budget, right? And you'll know from all your experience, you cannot do the thumb suck budget either. You can't just say, oh, I think I spend this. You have to actually go through your real expenses. So that was the first time we drew up our spreadsheet, which we still keep today, by the way. The first Excel spreadsheet, my husband's very good on Excel. We drew the actual, what are we spending? And then, we looked at, as I said, that in the tiers was like, well, what has to go? Stuff has to go. Yeah. And that's what we did. There were things we had to cut out of our lives. But the other thing we did, because I was now so upset about this card that kept working, even though I was in overdraft, that I decided that we were not going to use the card. Because we were in overdraft, remember, I said, right, we're not going to use our card. We're going to go to cash. And we actually did a weekly budget, and we drew the cash for that weekly budget. And I went as far as putting the money in envelopes. So I literally had a petrol envelope, I had a grocery envelope, and I must tell you, had an entertainment envelope, because I still think even within that, you still need to say, well, there is still life, okay? So it's not saying, it just means that maybe you're going out for coffee instead of dinner. And we still had entertainment. And that is actually what we did. We went completely and utterly to cash. And I still remember about like 3 days before the end of the month, the envelopes would be empty. And I'd phone my sister and say, can we come for dinner? Or I'd do that, and then, it would literally, and I mean, there were moments of pulling the baked beans out the cupboard. Yeah. But there is something incredibly, when you're doing it with your partner and you're on it, doing it together, there's something incredibly liberating about living within your means. And actually, the more money you have, the less happy you are. I mean, there is, the easier it is to spend money, the less joy you get from spending. So when you've got less money and you spend it on something that's important to you, it actually gives you a lot more joy. So that I found an increase in my happiness position, because I felt I was in control. I felt that the money I was spending meant something to me. So I found it very positive. We obviously we were lucky because my husband was able to use the bonus to cover most of the overdraft. So we didn't actually have to necessarily repay debt specifically, but we did have to go into a very, very strict survival budget whilst we built up our incomes. And, we did that for a period of time. And Mapelo, we've always, subsequent to that, we got to a point where we didn't have to do the budget every single month, but every 3 months we touch base again, because it's important to us that we are making sure our money's doing what we want for us. But the one thing we never did, Mapelo, in all of the years, and we've had lots of ups and downs, we've never cashed in investments. And I think that is, so when you said, you've made mistakes, it's probably the one mistake I have never made.
One of the things in your talks, you always mention your son's unit trust investment that you started out very small. So let's talk about kids now. That you started this account for him, this unit trust for him many, many years ago. And what's fascinating to me is that you've never cashed out an investment. How many of us, and I've been guilty of this before, where I felt like, goodness, things are really pretty rough. Let me just take out a little bit. And I've seen how much I've lost out on the compound interest. Can you tell us that story about investing for your son from when he was born?
So I was, as I said, I was working by then I was working at a stockbroking company, and Satrix launched. So it tells you how old my son is. So he was 2. He was 2 years old and Satrix launched. And I thought, wow, this is great. I'm going to start something for my son. And I started off, their minimum was 200 Rand a month, I think, or something like that. And I started off with that. And I just kept putting it away. And slowly over the years, I think at some point the minimum went to 300, et cetera, et cetera. But by the time he was 14, it was worth 100,000 Rand. And, Mapla, from money that I have to tell you that when my husband saw one of the statements, he said, "Where's this money from?" And I said, "Have you not noticed the bank account?" Because it was so small that it was less than eating out. Yet, over time, that money built up to a really substantial amount of money for him. And, and I think that's what people forget about that small compounding. I don't have money to save. Oh, what's the point? I only have 200 Rand. It over time, it really, really makes a difference.
It makes such a massive difference. And in one of the coaching sessions where I was, doing a coaching session with this young lady who earns a stipend, she also believed that, you know what, I don't earn enough. I'm on a stipend. So what is 200 difference going to make? And I said, you know what, you are going to start this investment. And she's blown away. It hasn't been a lot since she started, but she's built that habit of putting money away every single month. And that she sees that it can potentially make a massive difference in the future.
No, absolutely. And it's that little bit. And, the thing is, Mapolo, I do something called, and you also do it, the your net asset value. So in January every year, I look at our investments and, and how much we're up and those sorts of things. That's one thing I do like to look at. And, the important thing is that people say, oh, I've only got 100,000 Rand, 10% of that's 10,000 Rand. If I've earned that, it's not that much money. Let me cash in my pension, and rather use it to pay off debt or something. But that's 1 million Rand invested in exactly the same fund, earning 10%, means you're getting 100,000 Rand return, right? But you're never going to get to the million if you keep cashing in the 100,000s. And I think that's, for me, the mindset is that we keep thinking, oh, it's not a lot of money. It may not be a lot of money now, but in the future it will become a lot of money. And the compounding effect of it starts to really kick in. It starts to really kick in after about 12 years. But nobody wants to wait in long enough.
And that's why I think it's even so difficult for people to get to grasp the concept of retirement, because you're saving for this future self that you don't even know, to the point where you'll even hear some people saying, oh no, but what if I don't make it to retirement? So saving for your future self can feel like it's tricky. Now, Maya, you have 2 boys. What do you think you've taught them about money?
Both of my boys are very good at budgeting. I can tell you that. So I think, they're actually quite money conscious, both of them, as in, they're aware of money. We've been very open about our, about how to manage your money. We've made sure that they've had pocket money, that they had to do certain things with. My son started university and we now give him an allowance. He has to pay for everything from his allowance. He has to buy his own toiletries, his own clothes, all of that. And I can tell you there's nothing that sharpens a young man's mind when he has to do these things. But, saying that, I've made a lot of mistakes along the way. So probably the biggest mistake, and the things that I can warn listeners, especially if they've got young children, is don't make your children scared. So, my son, my younger one, he was about 6 years old, and my husband was changing jobs, and we were going through quite a tight time, and we were moving from Joburg to Cape Town. So I went into one of my Maya's on a budget moments, and I cut all the extra murals, and I said, guys, there's not money for this, there's no money for that. And I didn't realize the fear that was building up inside him. And then the one day he burst into tears and he said to me, Mom, are we poor? Are we going to be living in a car? Because he saw us selling our house. And he didn't know where we were going to live. And he thought we were selling our house to live in a car. Something got into his head. And I suddenly realized what I had done. So I think we must be extremely careful about how we articulate finances to our children. And for him, I had to sit down and I actually found some little tokens and stuff to show him. Mom and dad have the salary and this is what we use it for. And, and try and explain to them that when I say we don't have money, it doesn't mean we don't have money. It just means we don't have money for those things, but we do have money for these things. And, I had to really spend some time trying to undo the terrible things I'd done to him. You do need to have these conversations. And Maplo, the other thing is, and I'm sure you'll find it with your elder one, is they are quite quick to have money conversations. We think they're too young. They are not too young. You cannot believe the conversation that led to with my son. He then started saying, but Mom, what if something happened to you and you can't work? What if when you get old, like Granny, where's the money? He was 6. So, these kids can very quickly grasp these ideas. And I'm not saying you must sit down and say to your children, right, you're going to have a money lesson. Every day, conversations come up, and use those as an opportunity to educate and to share with them knowledge. And one of the things I do is, sometimes you see like a really flash car on the road, and my son says, oh, Mom, look at that fancy car. And I say, now, Ben, the question is, does that person own the car, or does the bank own it?
There's always an opportunity to have conversations about money, but I like the fact that you stress that let it be age appropriate. Don't put the fear of money into your children. Let's just go back to, how do you undo, like you're saying, you started talking to your son about, okay, no, we're moving to a new house. Yes, we're cutting back on some things, but we'll still have the other things that you still enjoy. How do parents, especially because as parents themselves, they don't talk about money because of their own traumas, right? How do you fix your own traumas, number one, so that you are able to talk about money in an abundant way and also just a realistic way, and saying, this is our goals and this is what we're trying to achieve as a family? How do you fix your own traumas before you can even start teaching your kids about money?
It's the most important point to make, Mapala. Absolutely brilliant point. Because one of the things that I realized was the reason I could have those conversations with my son about what happens if you die, what happens when you retire, what happens, is because I had it all in place. So I could say, look, here's our insurance policies, here's our retirement policy, we have a will, we have these things. So, you as a parent actually need to get your own financial health in order. You can't sit there, parents can't sit there and expect their children to manage money well if they're not managing money well. You learn from example, not from, being taught. So, I agree with you. I think you do need to do the work yourself and actually try and get your own finances in order. And I think, Mapalo, you said something the other day, which I think I put out onto social media, was such a profound statement, which was financial intergenerational wealth is not just about money, it's about financial education. So if you're really wanting to pass this gift to your children, you've got to start with yourself. If you're sitting there and blowing the kids' education fund on the latest car, you've got a problem. There's no amount of education or financial education that's going to change your child's perspectives. Your choices and priorities are showing up as values in that family. And one of the great conversations I've had with my kids around the table was about values. What do we value? And I think those are very important conversations as a family. And what do you think is important to spend money on? What do you think the value is? And those are real conversations that you can have with your kids, but you need to know your values first as well.
So now you've had investments for your boys throughout. Now they're older, one is in university and the other one going to university pretty soon as well. Now they can have access to those funds, isn't it? Because it's in their names. Have you had that conversation with them to say, okay, obviously these are your investments and you can access it, and what are their thoughts around those investments? Do they see it as like, oh my goodness, I can't wait to just blow this money, or what are they saying?
I do think there's personality default. So people will look and say, oh, they're savers because of their mother. But actually, I think sometimes it is who you are. Neither of my kids are brand. They don't like brands. They're not interested. They're not. Well, I think my one child does actually love to buy stuff, but he also loves to see the money in his account. So he really gets a kick out of the growth of the money. And I do have to tell you, it was quite interesting. Because he's got a Satrix account, we were chatting and I said, and obviously very wisely I was saying, the markets are so cheap just before the elections, the banks especially, there's a certain time when dividend yields reach a certain amount with banks that you really know they're a buy. And I was having this conversation. Off he went and he bought himself some Standard Bank shares in his Satrix account. That's what he went and did. And he was very chuffed because he made $500, you see, when the market sort of jumped up. And then, of course, the problem was he came back to me and says, now, Mom, you know what I should have done? I should have bought on this day and then sold. I said, Ben, stop right now, because that's the mindset of it. You can't do hindsight. But so I think for them, they are quite, because they've been raised in an environment where we talk about money, we talk about investing, they see it as an opportunity, really. They don't see it as something that they necessarily want to spend. But, my son does have, there are things he wants to buy, and he works for that then. He goes out and he gets jobs, and he, that's how he sees spending, is from his working, not from taking it from investments. But, again, that is personality.
So we often talk about investments and saving quite a lot and about budgeting, but we hardly ever touch on the other side of insurance, life cover, income protector, critical illness. Why is that so important? Why is it so important, a component important of financial planning, not just to focus on savings and investments, but also to have insurance, life cover, and income protector and critical illness?
Mapula, when you work for yourself, it's important. So, I think these things are, I do have to tell you that in our budget, after our mortgage, our life insurances are our biggest spend. And it drives me mad, I have to be honest. Like it's like, it's a massive number. I mean, it's a really big number. And in fact, if we add it onto our household insurance, I mean, it's actually crazy how much we're giving to insurance. But so I know the feeling of resentment towards it. But at the same time, as a parent, I need to know that if something happens to me, that my children can finish their education. I mean, that is my number one priority. I need to know that the roof stays over my family's head. So I have to make sure I have life insurance to cover the mortgage. And then, things like critical illness, for me, especially as I work for myself, it's not like my employer can sort of fund me for say, well, take 6 months to get over your, cancer or something like that. I really do need things that can kick in for that. So I think for me, insurance is a very important part of your financial well-being, because those events can literally wipe you out. So all of those savings and all of those investments, if you become disabled or you are unable to work, all those investments and savings, you just have to draw down on them. So I think it is a very, very important part of it, but I do understand the pain of having it.
One of the things, you often talk about when we speak, you would say, oh, I met with my financial planner. And someone would think, but Maya, you are the money maven. You write about these things quite thoroughly at that. Why would you have a financial planner?
For several reasons. Firstly, they often have more detailed information on, especially on my insurances and my medical aid, and that they'll know the products far deeper. They work with them every single day. And in fact, he's given me a few tips on mine that I need to know, and that's really good. But the other part of it is actually a sounding board, because we are emotional creatures, and sometimes we need to be stopped in our emotional knee-jerking. And I think for me, that is probably the really, really, really important part for me. And I'll often sort of check in and saying, am I overreacting here? Or, and I think there is always sometimes the temptation sometimes as well to do things that are not that sensible. And having somebody to remind you, these are your goals, this is what you're trying to achieve. It just is a good check-in for me. So I think for me that is why I use financial advisors is I think sometimes product information, they'll have a little bit more knowledge than I will do on specific products, and then as a sounding board. But I think it was quite interesting. I asked this question on my social media platforms. What do you want from a financial advisor? And many of them said, help me achieve my goals. And I think that is a big part of it. And somebody can also run the numbers for you. Yeah. Do you know, most people do not know how much they need for retirement. They don't know, which means they are most likely nowhere near what they need to have. And I mean, that's a very good example of what a financial advisor can do for someone.
But I mean, someone could easily say, Maya, I can find those calculators even on your website or online. What do you say then to someone who just says, you know what, perhaps I don't really need a financial advisor. I can run those numbers myself. Then I have my retirement annuity. I just add extra to that.
Yeah, I mean, I think for some people they do DIY it. But for me, there's always things that you haven't thought about. In fact, I was chatting to someone yesterday who's planning for retirement, and I said to him, things like, does your medical scheme that he's on his wife's medical scheme, can you keep that after retirement? Simple question. He didn't know. Can you keep the critical illness into retirement? He didn't know. There's a lot of questions that I think people, unless they're involved in financial planning and are very aware of it, don't know the questions they're not asking themselves. And I think that's a very, very important part of financial planning. You don't know what you don't know.
One of the things that you often talk about, and we've spoken about this, is how especially women really throw themselves into taking care of their children and you just give absolutely everything. You have a slightly different thought to that, and you wrote about this on Mother's Day.
Yes, I think so I'm in that age where I have, I've got kids who still need me financially and even emotionally. I mean, they still need to talk to their mom. And I've got a mom who really needs me. And, I'm very fortunate. And of course, I have a husband who needs me, right? And I have siblings who need me because women play a very, very important role in families. They're called the kins keepers. So we hold the families together. We're often the emotional, facilitator in families. So you've got all these layers of emotional, but also financial requirements of you. And, that can come with quite a high a burnout rate. I mean, you can reach a point where you've actually spread yourself too thin, financially, emotionally, and physically. And I think that is something as women we do need to check in quite a bit and saying, how are we depleting ourselves? Because I think this role that we play has become, in a time before where women didn't work and they sort of stayed at home, they weren't carrying maybe sort of the financial responsibilities in work. But now we're loading that onto it as well. It is, we have taken on a lot. And I'm not saying we should go back home because I love my work and it gives me a huge sense of fulfillment and I love my financial independence. But I do think we need to look at the way that we are managing our households, the conversations we're having with our kids. Do we give too much to our children in terms of our expectations? And how do you draw the boundary also with family, both financially and the amount of time that you have available? And when do you want to be spending more time with your parent, like I do with my mom, and less time working because I feel like I don't have much time with her? So these are a lot of conversations, I must say, I'm facing at the moment, Mapelo. And it's important. And I think women need to have those conversations with themselves, with their families.
And I like the fact that, you spoke about boundaries. I think part of managing your money and energy is having boundaries with yourself and with the people that you do love. So on the last question, Maya, will you give us 2 or 3 myths that you see people still believe when it comes to money that you want to make sure after they listen to this conversation, they can say that is a myth?
Okay, well, there's a couple of really big, these things that I hear, and I just wonder where people get this from. One of them, and this is a very common one, is that if you put a deposit down on a car, you will pay a higher interest rate. You won't get such a good interest rate from the bank. This is because the dealers are telling people this. So a dealer says to the person comes in, and of course the dealer makes money on makes commission on the financing side, of it. Remember, you used to go to the car dealer and say, I can buy cash. No, they're not interested. They want you to take finance. So if you're putting a deposit down, obviously they're going to have less. The amount that they're going to finance is less. So they're telling people, no, don't put down a deposit because it'll worsen your interest rate, which is absolute complete rubbish. The other one, and I don't know if this is a little bit too specific for now, but it is about the 2-pot retirement system and that you're not going to be able to access your money after the 1st of September. Mapelo, there are people resigning right now to access their pensions because they think they won't be able to access them after the 1st of September. That is not true. You will still have full access to the funds that you accumulated up to the 1st of September if you resign later. So that's probably the other one that's really, really bothering me. Oh, and probably number 3 is that no, there is no special secret to making money. There isn't somebody on Facebook who knows more than you do that is able to give you a 20% per month return, okay? That just doesn't exist. I have, in 20 years that I have been, actually, if you add in my years of working in the industry, so we're looking at 25, 26 years, I have never come across anything that promised you a return of 20% a month or anything like it that wasn't a scam. So those are probably the 3 myths that you can apply.
Thank you so much for that, Maya. I really appreciate it. It was lovely talking to you and getting your point of view. And I love the fact that, now people will get to see that even Maya herself has made some mistakes, but you can get yourself out of that. Thank you so much, Maya.
Absolutely.
This was a Sasfin Wealth podcast. Visit sasfin.com/wealth for more information.